Being poor sounds like it should mean spending less money. Smaller apartment, cheaper food, older phone, used car, discount shoes. No vacations, no fancy restaurants, no random little rich person hobbies like collecting watches or buying chairs that cost more than a fridge. So, from the outside, it seems if someone has less money, they just live cheaper. Right? But that is not really how poverty works. Because being poor does not just mean you have less money. It often means every mistake costs more. Every delay costs more. Every emergency costs more. Every normal life problem hits harder. And somehow, the person with the least money often pays the highest price to exist. Which sounds backwards. But once you understand the system, it makes a very uncomfortable kind of sense. Let's start with the simplest version. Imagine two people need the same thing. A pair of shoes. One person has enough money to buy a solid pair that lasts 3 years. The other person only has enough money to buy the cheapest pair right now. So the first person pays more today, but does not have to think about shoes again for a long time. The second person pays less today, but the shoes fall apart faster. Then they buy another cheap pair, then another. And after a few years, the poor person may have spent more money on worse shoes. Not because they are bad with money, because they never had enough money at one time to buy the better option. That is the first hidden cost of being poor. You often cannot afford the thing that would save you money later. And this happens everywhere. Cheap furniture breaks. Cheap phones slow down. Cheap cars need repairs. Cheap apartments can be far away from work. Cheap food can cost more in health later. Cheap tools waste time. Cheap choices are not always truly cheap. Sometimes they are just expensive in slow motion. And poverty forces people into slow motion, expensive choices all the time. Now, let's talk about transportation. Because this is where the system gets brutal. If you have money, transportation is inconvenient. If you are poor, transportation can become a trap. A reliable car costs money. Insurance costs money. Fuel costs money. Maintenance costs money. And if the car breaks, the repair bill does not care that rent is due. It just shows up. Now, if someone has savings, they pay the repair. Annoying, but manageable. If someone has no savings, the same repair becomes a crisis. Maybe they put it on a credit card. Maybe they take a payday loan. Maybe they miss work. Maybe they lose hours. Maybe they lose the job completely. So the actual cost was not just the repair. It was the repair, plus interest, plus stress, plus lost income, plus the next bill becoming late. One small problem starts pulling on every other part of life. That is why being poor is not just about low income. It is about having no shock absorbers. A middle-class person gets a flat tire and says, "That sucks." A poor person gets a flat tire and thinks, "Okay, which bill is dying this month?" Same tire, completely different damage. And banks understand this. That is why poor people often pay more to borrow money. From the bank's point of view, lending to someone with unstable income, no assets, and no savings is risky. So, they charge higher interest, higher fees, stricter terms, less forgiveness, which means the person who needs the most help gets the worst deal. Meanwhile, someone with assets, stable income, and a strong credit profile can borrow money cheaper. They may not even need the money urgently, but because they look safe, the system treats them better. This is one of the strangest parts of money. The less desperate you are, the better the deal becomes. The more desperate you are, the more expensive the deal becomes. And this is why debt works so differently for different people. For a wealthy person, debt can be a tool. They borrow against assets. They use loans to keep investments growing. They negotiate better rates. They have options. For a poor person, debt is often not a strategy. It is a bridge over a hole. And sometimes the bridge charges 30% interest. Credit cards are the perfect example. If you use a credit card and pay it off every month, the card can be convenient. Maybe you get points. Maybe you build credit. Maybe you pay 0 interest. But if you do not have enough money to pay it off, the exact same card becomes a machine that charges you for being short. You buy groceries today. You pay interest later. Then the minimum payment looks small enough to survive. But most of the balance stays alive. So the debt does not disappear. It just sits there, growing, quietly eating future paychecks before they even arrive. And the worst part is that many poor people do not use debt for luxury. They use it for normal survival. Food, transport, medicine, school supplies, electricity. A bill that could not wait. So when people say, "Just don't use credit cards," they often miss the point. Sometimes the choice is not between credit card debt and smart financial discipline. Sometimes the choice is between credit card debt and not getting through the week. That is not a money habit problem, that is a lack of options problem. And poverty is basically a life with fewer options. This shows up in housing too. If you have money, housing gives you choices. You can choose a safer area, a shorter commute, better insulation, better landlords, more space, maybe even ownership. But if you are poor, housing often becomes a trade-off machine. Cheaper rent might mean a longer commute. A longer commute means more fuel, more bus fares, more time lost, more exhaustion. Cheaper rent might mean bad maintenance. Bad maintenance means mold, leaks, pests, broken heating, broken cooling, and more health problems. Cheaper rent might mean a neighborhood with fewer stores, worse transport, or fewer job options. So the rent is lower, but life around the rent becomes more expensive. This is how poor people can pay less for housing and still lose more from housing. Because the price tag is not the full cost. The full cost includes time, safety, health, distance, stress, and the energy it takes to keep solving problems that money would have solved instantly. Now, let's talk about food. Because food is another place where the cheap option can become complicated. If you have enough money and time, you can buy in bulk. You can plan meals, you can store food, you can cook, you can buy better ingredients, you can avoid overpriced convenience food. But if you are poor, you may not have that setup. Maybe you do not have a car to reach cheaper stores. Maybe your kitchen is tiny. Maybe the fridge barely works. Maybe you work long hours. Maybe you are too tired to cook. Maybe you only have enough cash for today, not for the big pack that saves money over the month. So you buy smaller amounts. And smaller amounts often cost more per unit. One big bag of rice is cheaper per meal than tiny packets. A big bottle is cheaper per ounce than a small one. A monthly pass is cheaper than paying each ride separately. But all of those cheaper long-term choices require money up front. And being poor means the upfront money is often the missing piece. That is the trap. The system rewards people who can pay early, pay in bulk, and pay on time. It punishes people who have to pay late, pay small, and pay under pressure. Late fees are a perfect example. A late fee is basically a bill for not having enough money at the right moment. Miss a payment by a few days and the company charges extra. Then next month, you owe the original bill plus the late fee. If that makes you short again, another fee appears. Now the problem is not just that you were broke once. The problem is that being broke once made you more broke later. Overdraft fees work the same way. The bank sees that you do not have enough money, then charges you more money, which is funny in the way a trapdoor is funny. And if this happens enough, people start making financial decisions based on timing instead of value. They are not asking, what is the smartest move? They are asking, what keeps the lights on until Friday? That question changes everything. It makes people buy worse products, take worse loans, accept worse jobs, stay in worse housing, avoid medical care, delay repairs, and hope nothing else breaks. But life loves breaking things. That is why savings matter so much. Savings are not just money sitting there. Savings are a wall between you and chaos. A person with savings can absorb problems. A person without savings gets hit directly. Same emergency, different outcome. A $500 problem can be annoying for one person and life-altering for another. And this is where people often misunderstand poverty. They look at one decision and judge it. Why did they buy the cheap car? Why did they take the bad loan? Why did they stay in that apartment? Why did they not move? Why did they not go to the doctor earlier? Why did they not buy the better thing? But poverty is not one decision. It is a stack of constraints. Low income, high risk, bad credit, no savings, less time, fewer safe choices, more urgent problems. And every constraint makes the next decision harder. This is also why time becomes expensive. Poor people often pay with time when they cannot pay with money. They wait longer, travel farther, fill out more forms, call more offices, compare prices harder, fix things themselves, take buses instead of direct rides, stand in lines, chase discounts, argue with billing departments, work extra shifts. And that time has a cost, even if nobody writes it on a receipt. If someone spends 3 hours taking buses to save a little money, that is 3 hours they could not use to rest, learn, earn, cook, study, or take care of something else. Poverty does not only drain bank accounts, it drains attention. It makes life noisy. When you have enough money, problems can become simple. The car breaks, pay the mechanic, the phone dies. Replace it, the bill comes, pay it. The tooth hurts, book the dentist. But when money is tight, every normal problem becomes a puzzle. Can this wait? Can I split the payment? Can I borrow from someone? Can I skip something else? Can I fix it myself? Can I survive it for one more week? That constant calculation is exhausting. And exhaustion creates more mistakes, which can cost more money. So the cycle keeps feeding itself. Now, none of this means poor people are helpless. And it does not mean every rich person is smart. Plenty of wealthy people make terrible decisions. Plenty of poor people make brilliant ones. The difference is the cost of being wrong. A wealthy person can make a dumb purchase and recover. A poor person can make one forced bad decision and spend months paying for it. That is the real difference. Money does not only buy things, it buys room for error. It buys time. It buys better terms. It buys the ability to say no. No to bad loans. No to bad landlords. No to broken cars. No to jobs that steal your whole life. No to emergencies becoming disasters. And when you do not have that room, the world gets more expensive. So yes, being poor is expensive. Not because poor people secretly spend too much, not because they all make bad choices, and not because the cheapest option is always stupid. Being poor is expensive because the system charges extra for instability. It charges interest for desperation. It charges fees for timing. It charges time for distance. It charges health for bad housing. It charges more tomorrow when you cannot afford the better choice today. And that is the part people miss. Poverty is not just the absence of money, it is the absence of margin. No margin for mistakes, no margin for emergencies, no margin for better long-term choices. So when a person with money buys something expensive once, it can save them money. When a person without money buys something cheap again and again, it can keep them trapped. Same world, same banks, same bills, but different rules depending on how much room you have to breathe. And that is why being poor is so expensive. Because when you have no cushion, every corner of life becomes a fee.